There are cracks in the housing market. Housing prices have held rather steady in the first month of 2025, but there's concern because pending home sales, well, they're declining. Year over year, pending home sales fell by 5.5%, with the worst decline occurring in the western region as it was down 10.3%. This was followed by an 8.1% decline in the Northeast, and the Midwest, well, that fell 4.9%. Pending home sales looked the best in the South, but they still declined 2.7%. The lack of demand is causing housing to sit longer. The typical home that went under contract sat for 54 days before the seller accepted an offer as of the 4 weeks ending January 26. This was the longest time span since March of 2020, and it was a week longer than this time last year. Now, what is giving buyers concern and causing them to stay away from buying homes? A big problem is that magic 7% mortgage rate, as the COVID era low rates are still, well, they're just too fresh in buyers' minds to ignore. If the mortgage rates continue to climb, that could push buyers off the fence because of feelings that they could see the rates go even higher. The problem is affordability would become even more challenging. The better alternative is for mortgage rates to drop, which makes higher housing prices more affordable. Keep in mind that the Federal Reserve cutting interest rates does nothing for long-term mortgage rates. That is based on the supply and demand of long-term bonds and notes like the 10-year Treasury. Buying a house at these rates is challenging as your expenses will be high, and I think you'll be disappointed on future returns as real estate does not appear to be on sale now. With that said, there could be some opportunities with inventory expected to rise. According to Realtor.com, the number of newly listed homes jumped just over 37% in January compared with December. More inventory and struggling demand could cause prices to reset. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.